Okay, good morning. What are we going to talk about? We are going to talk about what not to do from the time that you apply for your mortgage until closing. At least certainly not without talking to your lender, not your realtor, your lender. There are lots of no-nos. First of all, changing jobs. If you want to change jobs, we need to know about that. You certainly absolutely cannot switch the way that you are paid. If you are currently a W-2 employee with taxes being withheld and all of those things, you get a regular pay stub, and maybe you get lucky, you get a little money back from taxes at the end of the year. You cannot switch to being self-employed, going 1099, or switch your pay structure from all salary or all hourly to maybe salary plus commission, because that salary might not be enough to qualify you for that property that you want. And with commission, you've got to have at a bare bones minimum 12 months of that. We really prefer to see 2 years so we can average that out. Same thing with overtime. If you switch to a job where the bulk of the income is going to be coming from a lot of overtime, usually we can't use that if you haven't been in that job for 2 years. So those are one thing to do, changing jobs, that we definitely want to talk to you about that. The other thing is to run up your credit card balances, because that changes your debt ratio. It also lowers your score. And most people don't realize that. It's called credit utilization. The more that you put on that credit card, the closer you are to that limit, that will actually drop your credit score a little bit because you are using more of your available credit. In a very happy lender land over here, we really love to see you with balances of no more than 30%. I keep mine less than 10% most of the time, unless I buy a big ticket item that I know I'm going to pay off right away. I may put it on a credit card just for a little extra level of protection, but then I'm going to pay it off at the end of the month. So we don't want to do that. We don't want to make large cash purchases either, because even over your down payment money, your money for closing costs, we may have factored in some of what you have as what we call reserve funds. It just makes you a prettier date to the underwriter when they can see that you have an emergency cushion, and it might be a requirement. Sometimes to get that approval, it requires so many months worth of mortgage payments to still be held in reserve. Now, we don't have to hold it, but just that you have it. Now, if you go spend it all the day after closing, that's all you. But before closing, we're going to need to see those assets in the bank right there where we can see them. Don't make large cash deposits, because then you're going to have to write a letter of explanation for every single one of them, because the underwriter's going to see them and they're going to want to know why. So if you have a lot of cash coming in for whatever reason, maybe you had a garage sale or whatever, maybe just hold on to that money. Use that as your grocery money, running money for a little while, and then you can put it in after that. Don't open any new accounts. Don't go finance furniture, open a new credit card or any of that, or close any accounts without checking with your lender first. Who am I? I'm Jennifer.Grant with the Chuck Waldo Mortgage Team at Silverton Mortgage. All of my contact information is below. Please hit that subscribe button so you get future videos as they are posted. Have an amazing day.